Hi, this is Bill Wood with Disciplined Trading Decisions. Time for the weekend update for the S&P 500. But first, trading futures, options on futures, and retail off-exchange foreign currency transactions involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Welcome to the weekend update for September the 12th, 2016. We are covering the S&P 500 futures market. So let's take a look at the monthly chart. We had a huge down day today, though you wouldn't know it on the monthly chart. This is a chart of the VIX, the volatility index, and you can see how we shot up here. Loving that. Guess who's going to be shorting some premium? As you can see on the monthly chart, we are in an uptrend. We were in a 2-year balance on the monthlies. We broke out of that balance on mediocre volume, and now we're re-entering this balance area. With the Stochk all the way up here, we have plenty of room on the downside. The first place I would be looking at is this high volume node at 2061, 2065, somewhere in there. On the weekly, we have higher highs, higher lows, higher highs, higher lows. We're in an uptrend. Again, the high volume node here is around 2070, 2068, somewhere in there. That would be a natural magnet for the market. On the daily, we have this huge balance area. And we talked about this, that you have energy building up here, and when you break out one way or the other, there's going to be a lot of people that are wrong and would have to cover. So in this case, the longs had to liquidate. Of course, you do not want to step in front of this market. You have 2100, that might be a magnet. I have a high volume node down here, 2088. Again, a lot of room to go on the downside for the stochastic. On the 4-hour, I have a couple of things marked out. This may be a supply zone. This is a channel that coincides with this channel up here, and this is the bottom part of the Andrews pitchfork, and I have a high volume node here. So somewhere in this area it could bounce, but again, I would not step in front of this freight. Again, this is market profile. You can see all of the trading that was happened here, and then once it opened up down here, that's all she wrote. All these people were wrong. They had to liquidate, and so that's why you have this real thin structure here. This could go down for a really long time, but in general, this type of real thin structure here is generally revisited and repaired. So it will be interesting to see where we open up on Monday. If we open up in here, then we want to see if we get rejection out of this area. If we get acceptance and we start building balance like this, then we're likely to go lower. If we open in here and get into this area here, then we could repair some of these anomalies in here. Volatility is ramped up, so instead of seeing a day's range of like 13 handles, you may see 25 handles or more. If we gap lower, the first area where we may be able to find some support is in this area, where there's a supply zone and a high volume node. Some areas of interest is this low volume node here, this high volume node here. 2100 is a psychological level, and this high volume node down here. You can see that the stochastic is really low at this point, and so we could get a pullback just about anywhere. Again, expect a lot of volatility. If the market comes down here, it could maybe overshoot the 2100 area. If it comes up in this direction, it may find some resistance here. Let's just say that we opened up around 2115 and that we had a 25 handle range. That could be that big of a range, up to 2140 and down to 2090. And wherever we open up, you could move this box higher or lower. If we opened up down here, our low could be down to 2070, and if we opened up here, our high could be, up to this low at 2155, 2160. So be careful on Monday. So a couple questions I'd like to ask myself. Has the market had a chance to rest? No. No, not really. So I expect a pullback, but I'm really interested in shorting any pullbacks that I get. But remember, the range may be quite significant. Are the participants long or short? I think that they still have some longs to get rid of, to liquidate. So I think we still have some room on the downside. Is it early or late in the trend? Well, in the uptrend, it's really late. And if this is a new downtrend, this is very early. At the very least, it could come to the opposite side of this Andrews pitchfork all the way down here, 1950. Is it in balance or out of balance? It is out of balance. Where are the stops? The stops, it just let out all the stops. That's what it's doing right. That's what it did today. Who's hurting? The longs are hurting. All the longs are hurting, and I don't think that they've gotten all their positions out yet. Will the open cause other time frames to do something? Well, if we get another huge gap down, that could cause the other time frames to sell even more. Otherwise, I think that we could open, anywhere in here, and the scenario being the same, that we're due for a pullback, but it looks like it's going down. And as you can see, this bad boy can go down really fast. If we had a move like that over here, that would bring us past this line here. That would be down around 1900. We certainly have the energy built up for this move, don't we? So in general, this has a long way to run, but on shorter time frames, it looks like it could be due for a pullback. Now, as you see on this 30-minute, the Stoch can stay down here for an unreasonably long amount of time. Just look how long it has stayed up here all these months. That's what the Stoch can do. It can just hang up there at an oversold or an overbought condition. But you can see there's plenty of room to go down on the monthly, and plenty of room to go down on the weekly, plenty of room on the daily. It's only on the 4-hour, 30-minute that you look like you could have a pullback. So my plan is to find some premium to sell. That's number one. Number two, on some type of pullback, find a pullback that I can sell. So the first clue is going to be where it opens. If it opens down here, do we get acceptance? If it, do we have a close gap that we try to fill maybe some of these single prints before going down? Do we have a huge gap that's going to entice longer time sellers to just go ahead and press it? Remember, if we opened here around 15 and we had a 25 handle range, that would bring us up to 40 or down to 90. And that's if we had a 25 handle range. It could be larger than that, especially on the downside. This move here was a 270 handle move. So some targets on the downside would be this high volume node, this previous low. This range here runs into this low volume node here. And then, of course, this Andrews pitchfork. You also have 2000 in here. Of course, we thought this was the end of the world many times before, and we could, find support somewhere and make new highs. My target has always been 2200. Well, that was actually my third target. It's hit all my other targets. These highs up here, each individual high is okay as far as a top where there's excess on both of these bars, but as a whole, they didn't leave a lot of excess. So that was one reason why I was thinking that I could revisit these highs. But you just wait long enough, and everybody's looking around at each other and saying, I'm long. Are you long? Yeah, I'm long. And then once it breaks below, then they're off to the races. So that's my look at the market. This is Bill Wood, and if you're watching this anywhere other than my blog at disciplinedtradingdecisions.com, please go there now and check out our other resources. And while you're there, sign up for our weekly newsletter. And this is a reminder to trade according to your trade plan. Don't do what I do. You have to believe in your analysis of the market in order to stay disciplined and true to your plan. So, hey, listen, I really appreciate your likes, your comments, and your shares. it all helps to get the word out. And remember, stay motivated, stay focused, and stay disciplined, my friend.